work together to build a bigger cake or to bake a bigger cake? How can Joe work with Kenindia? Joe is a startup, Kenindia is a big insurance company, and you have agents. How can we work together? Yeah.
So, from where we sit as a startup, we look at collaborations in a different way. So, we're on the last mile distribution sort of play. So for us, we've had to create our own products because we couldn't get products that we could sell at the kind of rates that we wanted for the customers that we wanted, right? So the way we've done it is we've had to create our own products, but we are happy. We are the place where we can now distribute different products for different underwriters, right? So for us, we're happy to collaborate, and for some of us do a lot of omni-channels. So we have a WhatsApp chatbot and all those things, and we've done some fancy things around fuel cards that then we can embed different products from underwriters and then push it to the customer.
Maybe before we even go there, just sorry, I think you need to introduce yourself. Yeah.
Okay, so my name is Joel Masharia. I'm the co-founder and CEO of Motisure. And Motisure is we're an insuretech that is focused on last mile distribution of micro insurance products within mobility, right? So we're focused on mobility for now, but we're happy to distribute different products, and we are coming for other people's cake.
Doctor? Yeah, it's on.
I'm Dr. Arivadagan, working as a general manager in Kenindia as a marketing as well as operation. Last 2 years I'm working with Kenya. What we are seeing from the collaboration between the Insurtech and the insurance company, it is only initial stage. The market is very tight market. The market is totally driven by the brokers and agents. There is very less scope for the Insurtech or the people in a startup to do the business with the insurance companies. Even the product what was suggested, Macharia, it has to be approved by the IRA, then it has to come into the market. So, since the market is very tight, it has been dominated only by the almost 60% by the brokers and agents. The walk-in customers, the person, those who want to buy the insurance through the net, it is very, very, very limited. So the market, if open up, it will be very good collaboration between the insurance companies and the startup. The another issue, what we are facing, the Kenyan market is totally different from other markets. There is no cash and carry. It's a credit. Even if I want to take an insurance policy, either through the net or this, whatever it may be, or directly visiting the insurance company, I have to pay the premium upfront. If I go to the broker or agent, I have a credit for 90 days. How I can come to you? Even the platform, whatever platform I see in the online platform, even a few companies having only the online platforms, not all the companies. The product are very simple product only. So the reach out to the public, it is very much needed. If you take as per the recent survey conducted by one of the AKI or some other issue in the June 21, the awareness of the insurance, it is very much less. At least 41% says we know the moderate, 48% says we know very much, very less knowledgeable. So the Insurtech creates the knowledge. Certainly the people who reach the Insurtech, the startup people. So create the knowledge, it is very, very important. Another thing, the data. The data what the insurance company is having is very nominal data because data are not shared by the brokers or agents. So the product, whatever selling within the confined to the industry company, there is no new products. Even what the people needs does not been analyzed. So the chances I feel, if it has been broadened, the market it has been opened up, then certainly there is a huge potential for the improve the performance of the insurance company. In that, the startup companies can gain a lot of. If we take other markets, say about India, there are a lot of startup companies are there. They are open up with, even you can sit in a home, you can take a policy, everything. No need to go to insurance company.
So this is what I'm seeing, and you know I'm not in this industry, so I can say whatever I say. Yeah, I'm ignorant completely because it's not my market. But I feel like the industry is very closed up. Yeah, I feel like it's very closed up. And because of the traditional way of doing things, the industry is missing out on some of the advanced techniques, technologies, strategies, trends that are coming out. So I see, for instance, startups being or playing the R&D role. Yeah, playing the R&D role for the big insurance, because you see, you guys are busy, business as usual. You know, you have to service your customers, but the startups are operating at the ground, vitukwa ground, as they say. They are talking to the customers. They know the customers' pain points. They are innovating based on what they hear from customers. So I see a very easy partnership between the incumbents, that's the insurance companies, and the startups. But this doesn't seem to be happening. So that's where I'm coming from. So what do we need to do? Or is this not doable? Maybe it's not. Maybe I'm crazy.
Good afternoon. My name is Clifford Uchin, the founder, chairperson for the Association of Kenya Professional Insurance Agents, ACPIA. I'm glad to be here and to share with you all this afternoon. As I always tell my people, I'm more of a boardroom negotiator than a public speaker. But yeah, I always get a chance when given the role to speak. You have to stand to the occasion and also demystify some of the myths and come up with tell the people what is really, like you said, on ground, what is really happening there. ACPIA is a representative of the professional insurance agents. We are about 13,000 insurance agents in Kenya, currently registered, licensed by IRA. And we came together as like-minded insurance agents because we found that there was a lot of misinformation in the industry about the agencies and also the insurance industry as a whole. So one of the things we do is to try and professionalize the operation of our agencies through networking and even attending forums like this and listening what are people saying. I was talking to one of our members, Stephen Murithi, and Dan Songodo, who is the vice chairman, during lunchtime. And then we say, look, Dan, we were in a table, 4 of us, so when we were talking about every stakeholder is really fighting for their piece, the pie. The cake is big, but...
No, it's not.
The cake is big.
No.
But we are struggling for what, yeah? It's big, but we are struggling, we are fighting for the small piece that everybody is fighting for. You find like, it's a circle, we are in the, how do you call it, the square. Yeah, the square piece is everybody wants that piece. But I was in a conference yesterday in Togo, and one of the things they're talking about is like, the speaker from Uganda was saying like East Africa, Kenyan market, let's talk about somebody talked about 2.3, I can say 2.2, the penetration, and the penetration of insurance with around 60 plus insurance companies. Then you ask yourself, the 2.2%, what is the percentage that is remaining? Why don't we start talking about the 97 points? 7% that is remaining. All of us are fighting for the business that is already there. How can we come up with solutions to reach out to the uninsured? As we were talking with Stephen too, we said like the SME market, like Sumaya Hassan, the CEO of Takaful, has just said, the agriculture insurance, the livestock insurance, who is running to those markets? We are all struggling for the common, the medical, the motor, which is a government policy, and we look at the bank assurance and everything else. I was talking to the Bank Assurance Association, and we realized that what unites us is bigger than what divides us, and what we are fighting for. Actually, everybody is complaining, but why can't we come and sit down and say, like, this is an area that we are so much interested in, and we can build it as a...
So why? So can you give me some reasons why you guys are not coming together to create that environment?
Actually, that's the reason why ACPIA was formed, because initially everybody was thinking that somebody is eating into our space. But when we go to those people, we realize that they're also fighting for their own space. But talking to the regulator also, we realize that if the market, if everybody was to follow on the regulations, then we don't have, we'll have a lot to share and to talk about, which is beneficial to both of us. Collaborations and looking at areas of our strengths, like the bank assurance, they have the data, they have their strong point, the multi-sure and team, the aggregators. I see most of the aggregators as, I see technology as an enabler, not a competitor. But the kind of, how we put it out there is what makes it look like we are competing, but in the real sense, it should be.
So how do you see, for instance, for your members, how do you see technology enabling your members to do better?
You see, wherever I am, since COVID, wherever I am, I can issue a policy, I can issue a cover. I can't just send, I can send a notice. Once I get the renewal notice and everything else, once the dates are due, I can issue a cover from anywhere. I can just talk to my insurer, issue a cover when I'm not initially, like when we say the incumbents and we look at the old school kind of approach to this issue. We used to, one of the customer service, we used to do customer service was taking receipts to the clients, which was replaced by M-Pesa message and the notification from the underwriters. Yeah, so I think that's one of the areas that you have to look in. When you do the quotations, it's automated. Most of the agencies have systems that they interlink with the different insurance companies. So for me, it works that.
Back to you, Joe. What are the challenges that you face when trying to work with the big insurance companies, and how do you think, what kind of structures can we create to reduce that friction?
This is always hard for me, but essentially for us, when we started out last year, we reached out to quite a number of insurance companies to try and create something different. The reason as to why you see the 2 point whatever number, right, is because the underwriters create products that don't work for the customers. It's pure as that, right? And then they also don't know how to reach the customer, right?
So they're creating products that are not wanted.
Yes.
Here I want to interfere.
Yeah, I know.
Here I want to interfere. We never allowed to reach the customer directly.
Okay, wait, doctor.
Agency as well as the brokers.
Okay, just 1 minute. Let him finish. Then we'll come to you.
So
you'll have your time. Yeah. Products that are not wanted.
Yes.
Okay.
Let's start there, right? So terrible customer experience, products that don't work, right?
Products that don't work.
Yes.
So they're not wanted and they don't work.
Yes, because essentially the whole point of buying a product, an insurance product, is a safety net, right? But as everyone has said, claims it's something else, right? So what you notice is that majority of the customers, every time you mention something like insurance, even for our space, everyone walks out because they know this is a fraud thing as far as they are concerned. And we're talking about the ground itself now, right? So the products like if I can give you a quick example right now. So for you as Harry, what sort of products do you want as an individual?
What's the
Let's have-
motto? Home.
Exactly. So
My kids are all gone, so
this is what I'm trying to drive to, right? The 98 or the 97% that people keep talking about all want insurance. They just don't know it, right? And the reason is every time they go to look for an agent to get an insurance product, he's already provided with predetermined products. So it's either health, it's life, and the guy, it's a mamamboga. What he cares about is totally different from what you're trying to sell to her, right? And there's that disconnect. And what we've noticed for us is we try to sell third-party comprehensive and all these other products that they gave us, but then our border guys were like, we only get products just for regulation purposes and police, not really because we know it's going to help us. So that tells you there's a disconnect in terms of what the customer wants vis-a-vis what the market is already providing, which is now the underwriters. And that's a huge problem because what we ended up doing is creating our own product based on what the customers asked for, right? So a customer will tell you, me, I don't care about the bike itself. All I care about, if I get into an accident, can you pay my medical bill? And I don't want a medical cover. At the same time, he wants you to take care of the wife at home. So if he gets into an accident, he gets hospitalized. He cannot earn. That means that they cannot eat at home on that particular day. So he wants that taken care of, right? In case he dies or he gets disabled, he wants to make sure that his kids go to school, right? Now, if I go to the underwriter, what Kenny India will tell me is, we have a medical product, here you go, right? We have a life cover, here you go. We have whatever it is, loss of income, whatever they call it, right? They'll give you 3, 4, 5 different products, right? That means that the premiums are a bit different. And the customer is saying, I don't care about that. First of all, I cannot afford what you're trying to give me, right? So there's an affordability issue, there's an access issue, there's a coverage issue, right? So what you see is that customers, every time, preterm sales agents will, stalk us or accost us at the, supermarkets, no one wants to listen to them. But everyone thought why? Because they're going to sell to me the same thing, everyone else is selling. I don't care about an education policy anymore, right? I don't want a medical product. I already have one, whatever it is. But they should come and ask me, what would you be interested in? And then I'll tell them something weird, like, oh, I have a grandma who's 71 years old that needs this particular product, right? It could be a weird, chronic diseases sort of product, but they will not curate it the way I would want. And once they do, it's going to be too expensive for her to pay or for me to pay.
Okay, I want to ask Doctor and maybe some people in the room, how difficult is it to create an insurance product?
It is not just like creating or buying the product. It needs actual evaluations. I cannot just introduce any product. First, I have to
Why?
do it because if I give that into the market, whether the product will sustain my liability. Second thing, any product, it has to be approved by IRA. I can introduce a product, within a few days I cannot withdraw the product. So any product, even modification for a new product, I should have an actual valuation, because you are paying 1 shilling to me, but you are getting a claim of 1,000 shillings. The insurance concept is pulling the risk and sharing the losses. It is not just like a bank deposit. Even if you take, there is a total difference between a life insurance, non-life insurance. In a life insurance, you are paying 100 shilling, you are getting back 100 shilling, either the maturity or the death with the interest. Out of the 100 shilling, you are paying only 5 shilling for your death cover or PTT cover. In general insurance, for a personal accident cover, you are paying 1 shilling and taking me from the 10,000 shillings. So it goes by the probability and mass. So any product I have been designing, it should take care of my liability.
Which is okay, I think, which is okay. But isn't that the whole concept of business? And we build products every day, different risk, different, so where's the big problem? Where's the problem? Because you see,
There is no problem at all. I cannot say there is a problem. It is need-based. First thing, we are not access to the customers. What the customer needs. Even I cannot print a policy, the customer detail, mobile number of the policy. If I want to send one SMS also, I have to get a concurrence from my broker. How I can get the feedback from my customer? So there are standardized policy. We are modifying the policy based on the customer needs. The customer needs, it is very difficult to inform to the insurance underwriter.
Okay, so what I'm hearing is you don't know what the customer requires because there's somebody in between there. So there's a customer, there's in the broker, then there's a underwriter. Is that what you're saying?
Yes.
Okay.
There is no direct contact with the.
Just to add, I think what Joel did tell you, I don't know if they go through the same process that insurance companies go through before they roll out the products that they are selling. You should clarify that.
No, you can tell us if you know. How do you?
Yeah, same. So the IRA has to approve the products, of course, because they are carried by a different underwriter. Insurance company. So the way we create the product is we get feedback from the customer, right? The way we created our product was focused purely, right? Over 600 borders dictated what they wanted to see. And I came back with the data to my underwriter and told them, listen, this is what is happening on the ground, and this is what they need. You go figure it out. And we reached out to the IRA as well, and the IRA helped approve that particular product through one of the underwriters. And that's how we're able to get the product to the customer.
I agree.
Right?
I agree with you.
But then the underwriters, the problem is, and what they'll not accept is, the underwriting team, the actuaries, will take you round and round and tell you about risk, and will tell you, okay, this makes sense, but then the pricing point will be the problem because they will want a higher premium, right, for the sort of rates we want. But no, that's prohibitive to the customer, right? And then they'll tell you, okay, for you to get this product, give me X number of people. But for them to roll the product out. So you wonder, like, are you supposed to go get the customer first, then come with, hey, I have 10,000 customers, give me this particular product now. That's exactly where the challenge is.
Okay, I think, thank you, moderator, for that opportunity. My name, I say, is Stephen Moreidi, Honest Insurance. Now, whatever the CEO of Motishua is saying, I've been in the insurance industry for the last 13 years, and I can tell you, I've not seen underwriters engage us when they are developing products. We are the ones who have been going to understand what the customer needs. They develop the product. There's a disconnect. They develop products from the actuarial team and a few other guys who have no access to the ground. Sauti ya ground, hiyo unasikia inatumika kwa politics. So what he's saying, he went to 600 of border riders. The same way, if underwriters would embrace partnership, that they come to us and what is this your client keep on asking for? We sit down and craft a product with information. We'll be able to get a right product for the market. But now they'll tell you, we have a new product, go and sell it. That's the problem. We cannot sell a product that is not being embraced in the market. We have to first understand what the market needs, bring it on the table, come, we discuss. Then the actuaries agree that we also have a say in terms of what the customer needs. From that, we develop a product that is marketable, that should be accepted in the market. But if I come with a product and price it and all that, then say we are launching a new product, we do not consult any of the team that's in the sales. Well, that's where we go wrong. So what you're saying is right.
So I have a question for you.
Yes, please.
So you work with the underwriters, the insurance companies.
Yes.
Right?
Yes.
But you're the one on the ground.
Yes, sure.
And this product is sent to you to go and sell.
Yes.
Do you at any one time tell them that this product is not sellable?
We tell that many times. We say even this exclusion, these clauses are not working, but most of the CEOs and top management are kind of fixed and bureaucratic in terms of how we come up with the changes. They are so rigid in terms of changing products. And that's why we need people who are coming to disrupt the industry so that they understand why we need agents, even other players, to develop products and even get even foreign companies to come and be the underwriters so that we disrupt that market. We reach a negotiation table with the underwriters.
Sumaya, yeah. Mm-hmm.
Thank you so much. I think one of the challenges this industry has been having is this misconception, historical misconception that we own the customer. Underwriters thought that, intermediaries thought that, everybody thinks they own the customer. Now the penny has dropped that the customer belongs to themselves and no one else. Yeah. So, when Google came up with the blue dot, me in the middle, and I can watch myself as I walk, looking at the phone, then the penny dropped that, by the way, it's about the customer. It is me in the middle. So this customer that we are all fighting about in this little fish pond of 2.3% is looking out for themselves. So the minute Joel comes up with something or somebody else that's making sense, they are gone quicker than you can say customer. That is the truth. Now, we have found a challenge before in our relationship with our intermediaries. And we've had people here talking about, oh, I didn't use my cover, what do I get? Well, we as a couple, our model is we pay back surplus. At the end of the day, there's money left in the account, the money belongs to you, we pay you. Now, guess what? This customer came in through an intermediary. We are looking for the customer. You can't find them because the intermediary has hidden their contacts. And maybe they've since divorced, because their relationship is a bit come we stay. And now the next time you're trying to get this customer, intermediary has moved on, they don't know. And actually some of them will even give you their own contacts. So I'm here having money looking for the customers. Guys, I have your checks. Where are these customers? And the intermediaries can really huff and puff and, threaten to blow the house down about that. So what I'm saying is answering the question of the agenda of this particular session, I see that the opportunity here is to collaborate. There is no other way. Each of us must play to their strength. We can sit there and come up with all these things that Joel is talking about. Actually, we do a lot of those very bespoke, curated products, but we don't have the agility that he has in terms of what he's doing on the ground. So I should partner with him. Yes, and then I should partner with Clifford and team who also have their own, areas of expertise. So this fish pond, the only way we are going to get out of it is through collaboration and stop thinking we own the customer.
Awesome. I think that is, to me, that's a conclusion. Yeah, because I think, because you have your strengths, Joel has their strengths, and if you guys come together, then you build a better team to grow the industry. You wanted to say something?
Just to add on what Sumaya said.
Okay.
Yeah, I think one of the areas we are trying to capitalize on is partnerships with all the stakeholders. We all belong to this industry, and the goal is to grow the industry. And one of the things I've realized is that we are in a flight mode. We are almost like, I want to see who do I blame for what is not happening, what is not going well on my side. The industry belongs to all of us. So as I said before, that most of us, like Stephen has said, in the insurance industry, as agents, the products that we sell are what gives us big commissions, not what is valuable to the customer. So if we continue selling those products, I have my needs as an agent. The company looks at its own interest. The customer wants value. I work for a life company, and I think Kinaanwa here, and you realize the commission is too low, but the interest is more of the customer interest than the agent's commission. So if we look at it in the long term, and then in the long run, look at the collaborations, look at how can we professionalize the industry, the pond that Sumaya is talking about, how can we get out of this pond? Joel is coming up with a partnership, ACPIA and the agencies. How can we go back to the intermediate? The Kenyan market is strongly intermediated, yeah? and most of the products are sold through the intermediaries, the agencies and the brokers. And there are some products that the brokers won't touch, and there are products that the agents will reach. There are the products that Joel is the one who will sell, like if the bundling, the products of bundling and everything else, the bank assurance, every industry stakeholder, every industry intermediary. If you look at it beyond just me, myself, and I, and look at how can we build this industry, how can we build ourselves, then we are in the right track.
Okay. Yeah, go ahead. I think just before you go on, I think there's something that the IT industry has embraced, and that is scale, which I think the insurance industry needs to start learning. When you look at scale, when you speak to Roy, for instance, what you're saying is low commissions, but imagine those low commissions but at scale. Yeah, that's what we need to start thinking about. Yeah.
Thank you. Thanks. So
Yeah.
I think when I look at the conversation and I look at him and I look at him, the only difference between the two is that one has decided to build change using technology without really, and then selling that value proposition to the underwriter. And then the writer has onboarded. So I think the challenge I have for agents is that this is space for everyone. And I've seen this even in other industries where you find there's an automation process, and everyone who's been in that process, for example, in capital markets, they fear. Brokers feared about automation. But what happened after automation came? The pie was big. They started now, everyone was making money. And I'll tell you this, there's always someone who would want to go straight and buy the cover, and there's someone who will always use the agent because there's value proposition there. So I think find your niche, then utilize that niche to serve the client. Where we are headed, and the Gen Zs that are coming up, they'll tell you things, and I would really love that as you develop your products, including the underwriters, don't develop them in a boardroom. Go there. At Safaricom, we work on agile. And agile means that we go, listen to the client, pain points, come and address the pain points. That's why you have today, Fuliza, we are disbursing over 300 loans in a second. Why? You can do it on your phone, and we understand the need. So you don't create products proactive or reactively. You become proactive. And listening to this gentleman, he has a lot of solutions that people are not hearing. Maybe he's saying them, but people are not hearing. And I think you'll only listen. You'll only hear one day when he partners with one of the biggest underwriters, and then the entire industry will start running to look for him. And by that time, you'll not afford him.
Okay, that's good news for Joe. So
we should work together. We should have
so boss, that 10%. Yes, go ahead.
Address this. Again, we are telling the product development. I agree with what the Joel has said. But before developing any product, we need the data analysis. So
Skills.
data analytics. So if certain area, if you take about the entire premium, what we are getting, almost 80 to 85% within Nairobi. Within Nairobi, what about the 48 counties? Are you working for this area or other area? So I am free, I'm ready to accept such a proposal with have a clear data analytics. Then I put up the, what is that? Actuary. Because I studied actuary. I know how to product the rating, but just giving a product, you sell it, it is very difficult to the insurance company. Because once I accept the product, my brand name also is key. My brand name. I cannot introduce one product, just like withdraw. So any product, it has to be marketed, just we come with the statistics, with the data full analysis. One small example I tell you. There are a lot of claims in health. My friend is asking for 71 years, Mama, why she has not come from the 45 years? You tell me. Why you wanted a 71 years with a cover of 5 million? That too with PTT, PPTD. She does not have any work at all. But he wanted, she fell from the steps. I had to pay 5 million. This is the product.
Look, I'm accounted to that.
No, just let it finish it. Okay. So don't mistake. Okay, the product should be viable to the insurance company. Who has to certify? My actuary. Sometimes as a marketing head, I can take a decision, let it run into the market. I cannot take everything on my own. Thank you.
Joe, you were saying something, Joe.
But then this is what I'm
Okay,
talking about.
yeah.
This is exactly what I'm talking about, right? Now, and this is my challenge with this industry, right? So Lamy has a full end-to-end platform. Okay, they are friends, so they have a platform. They have data analytics. They have what he wants to see, right?
Can you do analytics and risk assessment on your platform? Okay.
So for us, on our end, we're already creating that on our platform that we're happy to share with any underwriter if they want to look at the border space and why we're having a bit of success on that space. But that is exactly what I'm saying, because are you saying my grandma is not a customer? Why not give her, instead of you giving her 5 million, why not give her a micro product? Why not give her, why can she pay 500 shillings? And in case she gets sick or falls or whatever it is, just give her 5,000 shillings. Why does it have to be such a complicated product in terms of benefits vis-a-vis the premium, right? And I know you're going to go to the regulation and all that, but that's not my point. My point is, there are products that can be done on the micro insurance space that don't require all that actual work, in the sense of get attention. Like we have a 10 shillings product per day, right? We have a 1 shilling product per day on the border side, right? But the benefits are so limited that we want to pay 70% of the claims, to be honest, right? Because the whole point of insurance is claims payment, right? So the way we are approaching it is a bit different, and most of the underwriters don't like listening to this conversation, but we want to pay more claims so that we can bring in more people. That's a long-term game, right? But then we can do 60%, right? What we'll not do is, we'll not pay them 1 million, 2 million, whatever that huge number is. We'll pay them 10,000, 5,000, 6,000, 2,000, 500 shillings.
So would you, and I want to ask this to Sumaya, Julius, Judy, Alex, do you think that the insurance industry is stuck in a very old business model that needs to be shaken a bit?
So let me say something. I think I like the innovation, but I think what from an inside approach, if I think about it, I'm thinking you're not thinking about the risk-based pricing. You're looking at the paying of claims, you're looking at the onboarding, but you're not looking at the risk that the insurance companies are covering. So if you have to look at it from end to end, the onboarding. So if you're doing an analysis, because I think I've heard you talking about data, I'm thinking if I'm pricing for border people, the accidents in Nairobi, the accidents in Mandera, Mombasa, am I looking at this whole ecosystem, or am I just solving one problem of what the customer is telling me? Let me give another example. If today somebody was to task NHIF to take in the medical for, even let's just take one line, cancer, of what we are saying? Do you think they'll handle the burden? So when we are innovating, whilst the insurance companies look a bit rigid, I think everybody who's innovating should also look at the risk across the whole ecosystem. So it's not just about the claims or 1 shilling versus the 7 or what somebody is bringing in. But if you look at the whole from start to end, how can we innovate, including we were discussing fraud? Because I think, I can't remember the statistics, but I know fraud, that element is also being factored in terms of the insurance in this country. And we know very well, it's now, let me say it's a pandemic. Because we know, yeah, it's been ranked. We know GIB, the problems. If you're talking about medical and you have hospitals that are probably inflating small costs for medical or procedures, or taking somebody through procedures that are not required, well, you're going to disrupt this whole industry. And probably, personally, that's how I'd look at it. It's a problem. It's not just what the insurance company is telling me, but it's a problem even from the outside. So if you look at it, discuss where the problems are end to end. So that's why you see when NHIF was challenged about taking up, they opened up the floodgates and suddenly everybody was going to Kijabe because they have a surgery or what. NHIF could not cope with the claims and they had to, come in and do something. So the broker has a role to play. Just as she said, the broker has a role to play. They know the fraud. You who's innovating, look at the whole ecosystem. The external players know what are the problems. The garages know the problems. So, how to answer your question? The problem is not one. It's not the insurance companies are rigid, but probably they do not know how to come out of this issue. So let me put it this way. If you go to outpatient, that's why you see nowadays with the biometric. You have to register and to do all that. It's reduced a bit of the fraud. When you go to inpatient, what's the problem? You just need to, oh Lord, do I really need to say it? Okay. Depends on your agreement. If I need to do, a fraudulent claim, I can agree with the doctor that, my brother needs to be treated and all these things. So we know some of the big schemes that insurance companies will not take because you have to pay the claim. Whilst you know very well, what are they doing? They are treating 72 cousins and 6 girlfriends. So that this problem, when we are thinking about it, is as you innovate, please note, look at the numbers, which line of insurance is making money. Is GB making money? I don't know whether the insurance players can say it.
No.
Is medical making money? You only did it, that one was once, because we can tell it. You've been making profits on medical.
Oh.
But we can challenge that. So, if you look at which line of insurance is making money in this country.
So which one is it?
So if you don't have life, and it's life. So it's
Only.
life. So what does it tell you about the insurance in Kenya? If I don't want my car, and I know the ways of, the good ways of doing the fraudulent claim, I know what to do. If I want my medical or somebody's medical paid in any other way, we know how it's going. So,
Sumaya, you want to say something?
Yes. I think the challenges are well articulated and we all agree, on all those challenges. But by way of a proposed way forward, one of the biggest challenges we have as a sector is that we are so siloed and insular we don't talk to each other. We don't. That we will sit and share data, we don't. Now the fraudsters have completely taken advantage of that. They have leveraged and milked that for all it's worth. They don't even try to be innovative in how they do fraud. They will hit each underwriter in an identical manner. And because I am a relative newcomer to this sector, you know, I've seen this in my previous sector, and only when we started talking and sharing, then we started seeing things falling down.
But why are you not sharing? And I want to put somebody on the spot here. And she knows herself. Boss, just give that microphone to that lady laughing very... Introduce yourself, then you tell us why we have silos.
Good afternoon. My name is Brett, Division of Kenya Insurance.
Just done, Rachel?
Good afternoon. I work for the Association of Kenya Insurers. My name is Bretta. I think the insurance sector has come a long way, and I would like to give it a pat on the back. Despite the fact that we are still in silos, but in some sections we are trying to get out of those silos. For example, the motor sector, we've done quite some strides there. And now we are actually going into the health sector. So in the morning we earn, digitization is not a sprint. It is a marathon. The reason why most of the insurance companies are in silos, and please don't hit me with stones.
No, I'll protect you. Don't worry. You can speak freely.
It's because we all know what we are doing, and we do not want to expose ourselves. When we started the journey in motor, I will not mention the insurance company, but the same insurance company and paid a claim over 4 times. Same claim, same vehicle, same owner, over 4 times. So you can see we will want to stay in that silo because even us ourselves, we know what we are doing. However, we've been able to iron out very many issues within the motor sector, and I believe right now we are at a stable place where, for sure, I know you cannot insure a vehicle twice. And anyone who has insured a vehicle twice this year, please let's appear.
They won't do that. Trust me.
It is not possible.
It's not possible.
It is not possible.
Okay.
It is not possible. Second, if your vehicle is stolen and you've not reported it as recovered, let me see who has insured it in Kenya in this room. It is not possible. If your vehicle has been written off and you want to insure it, you as an insurer, you have to give consent that yes, I'm insured it again. It is written off and I assert it. So those are some of the strengths that we've made in the industry because of the collaboration that we've done with the insurance companies. We will keep moving a step at a time. It's a marathon.
Thank you. Okay, so there's movement. We probably, okay, go ahead.
Thank you very much. Now,
Yeah.
You know, I would like to answer my brother Joel.
Okay.
So that we get to understand the process we go through before, you know, we start giving cover to.
But also we want solutions.
Yes, that's what I would like to explain. So at least when he's coming, he also is having the right kind of information on the process at hand. So normally insurance companies, we do pricing, and in the pricing there are 3 elements we look at. The first element is how much am I likely to pay out as claim figures, because they will come. So that's already we factor in. So we use some calculation from past experience that can help us to, to project. And again, it's a guess, it's guesswork done by our actuaries, but it's somehow accurate. So now, when you're coming, it's very crucial that we also get to see the data you have. Let's say it's motor vehicle or it's riders, and it's from a particular area. If we're able to get data showing how many cases of accidents happened in that area and all that kind of stuff, because where you have gone to is an area that's not the traditional insurance area. So we don't have that data. It's a green field. So that data will help us to somehow price. So, and then that's claims, and then there's a commission you expect. Because you can't do it for free. And there's also an admin fee that I have to incur in my back office to manage that process, whether it's the systems I'm hosting or whatever. Those are admin costs. And that's where, as if you are an efficient insurance company, then the admin costs will be very high. You can go and check the books of accounts of various insurance companies. You find others have got admin cost of 12%, 13%, others go even up to 40%. So it's a figure we include in your premium. And then after that, of course, I have to include the profit margin that goes to the shareholders. We are not in charity. So that's how we do it. Now, that particular then product you bring on board, I will then price it, and I have to present it to a regulator for approval. Now, we have got a fast mechanism for approving microinsurance policy products. Actually, the regulator fast tracks the, any microinsurance product like what you have. So normally they will give you 30 days, but for this one, we take even 1 week or sometimes even less than that. Because it's all about impacting lives, covering, reaching the people are not privileged. So you may again then give us those 30 days or 1 week to 30 days. Now, they require particular information before they can approve that product. They can't approve a product that is not going to make sense. That's going to make an insurer go down. You see, if you're going to have 1 million riders and then all of them, half of them get accidents, and then you have to pay 600 million, and it's beyond what you have as the solvency, the insurance company cannot survive. So they have to get data. Also, they have their own actuaries who will look at that particular proposal you have given, your pricing, and then either approve or not approve that particular product. Now, when you're doing that, you also must provide your break-even point. So I'm talking of scaling. At what stage is it going to break even? And is that going to expose the company so much such that the product cannot make sense? So all those are looked at. So when you come in, if you tell me 400 customers, each of them paying 5 shillings per day, even if it's for 1 year, that's like 1,500 per person. 400 customers, that's how like 500,000. 3 people, claim comes through, you're already exposed. You don't even have anything. So I think those are some of the things we need to look at when you come on board.
Okay. So as you're supplementing, please also make your closing remarks.
Yes.
Okay.
I take all the things. Regarding the microinsurance, I done my PhD on microinsurance. The thesis is totally evolving the insurer, insured, and the agents. The awareness has not reached the public, almost 70 to 80%. Again, the reason for not selling, low commission. Whether my agent will, whether our people will take 5% commission for a microinsurance product, what product I can give? Health I can give, PA I can give, active insurance I can give, then agriculture insurance give. In life I can give small type of pensions. The premium is very low. Even as Sir has told, a small client comes, I have to bother. But at the same time, I have a social responsibility. I can leave it. In India and other countries, they have the subsidy from the government. Say about, even I launched almost, I covered 30,000 people under a medical policy, which having a premium just 300 shillings. The benefit is up to 30,000, that in Kenyan shilling, it is 50,000. Even the maternity has been covered. Even that TPP, temporary disablement, has been covered. But that much government support is there. After all, this is a business. How much I can share with him. I cannot make the 100% as a micro-insurance product. I agree with him. Let him come with the product with full details. I am also looking out in Kenya some of the products, because that, as said, we cannot sit in the actuary and make the product. I want a ground reality. Whether the product I'm filing with the IRA, first they have to accept it, whether it's a viable. I cannot get into the solvency issue. Second thing, I can say there are a lot of opportunities to the startups. The marketing, the underwriting, you can give the data and give the product, we'll set it. At the same time, that can involve in how to control the losses. This we have not thought about it. Because again, I getting 100 shillings premium, I'm worried about the outgo only. If the outgo is 100, it's okay. It is go beyond, it is very difficult. For example, there are so many hospitals suggested they are making a false claims. Why they cannot be audited? Why they cannot give the pricing comparison? In one of the states in India, they are covering almost 1,500 diagnosis treatments with a single rate of claim. That is for the expenses. If you want to do for hernia operation, this is across all the hospitals, one single rate, because that much analysis has been done, data has been collected, a fixed rate. So this type of data will help us. Another thing, motor claims. If you buy a local part, it is used part, it is 500 shillings. If I go to the new part, 300 shillings. There we are. So this type of, if he comes, yes sir, this is analyze this area, this, even analyze the repairers, garages, you give the ratings. So these kind of services certainly will improve my ICR. My ICR has come down, I can take more risks.
Okay.
Thank you.
Thank you. Joe?
I just wanted to counter what they just said. We do have 2 actuaries in my company that have been in some of the companies somewhere. And they model the products as well. So we don't just bring a product, well, I don't know what they do usually. We do have a rating engine and all those things, but it's jargon to me. I'm a techie, right? So I don't have an insurance background. But I hear what you guys are saying, and it makes sense, right? So all I'm saying is, this is the start of a conversation, right? Allow us to come with what we've learned and what we've seen on the ground, and then let's use what we've learned and the data we have and everything else we're trying to do, and then see how we can plug it in, right? We are not rigid in terms of how we move. We make changes of that every day, right? So we could be wrong, right? But I think our books are showing we might be on the money somewhere, and let's just figure out how we're working together, and then we take this to the next level.
Awesome. Yes.
Just to add what you guys have said, and Aki, we appreciate you for the work you do, and I think that is one of the things that is going to shape this industry when such issues can be controlled. The key thing here is collaborations, and looking at what Joel is saying, Dr. is saying, and even the MPs and the industry stakeholders are saying, it's like there is a disconnect somewhere, whereby we always look for who do we blame when there is a problem. Why can't we say this? Like they say, don't ask what the country can do for you, the government can do for you, but what you can do for the government. And let me put it this way in the industry. There are several things that have happened in the past. So when we don't have these conversations, some of us are not part of this, then we come with the old mentality that there's nothing that is happening. So when we have these conversations, let's be genuine in our intentions. Let's have a discussion that is going to change the industry, because looking at it, we are currently working with the regulator on issues of self-regulation, and I think if all goes well, we have been talking even to Aki, the bank assurance, if all goes well, I don't have to put the cat out of the bag, but there's a way that you're going to work on self-regulation of agencies. and these complaints are going to be a thing of the past. And we really look forward to your support as the CEOs and others on the industry stakeholders to come up with something that will enable us as agents also to be part and parcel of these industry discussions. Like Steve has got, I was having a chat with the reinsurers, and we told that most of the pricing and the products and everything else is the reinsurer. You are blaming insurance companies for no reason. It's the reinsurers who control most of these things. I don't know if I'm wrong or right, but that is a conversation that is currently ongoing.
Okay.
So if we meet and talk, we move from the talk to action. The discussions that we have on this floor, we will continue talking until we all retire. We say that we were there, but we are the change we have been waiting for. We can do it.
Thank you very much. Thank you very much, my panelists. In the morning, when I was closing, I said, we are talking about digital transformation. And if you asked 10 people what digital transformation is, you get 10 different answers. But my definition of digital transformation is take everything that you know about your business model and throw it out of the window. That's my definition. Because you need to think differently. Yeah. When I listen to the different stakeholders here, I'm hearing products, market, and fit, which is like the first point of starting a business. Yeah, where you have a product market fit. But here we have a product market and fit. Yeah. So these are things that we need to start thinking differently. And modernize our processes, modernize our products. I also talked about somebody who wants to be covered only for the weekend, because it's the weekend that is at risk. He goes out on on Friday and Saturday. Hanye, sherehe. He only wants to be covered for those 2 days. Yes. So we just need to, I think we need to just think differently, honestly. I know it's a business, and you have to make money, but how can we look at the trends and create stuff that people are happy to actually buy? I totally disagree with this position that you guys are picking, that insurance is not bought, it's sold. I think insurance can be made sexy and people can buy. But we have to work. We have to work. We have to make it sexy. Yeah? And with those few remarks, I want to release my panel. Thank you so much. And